Over the past couple weeks, there's been a lot of news surrounding Medical Properties Trust, ticker symbol MPW. In just the last 2 weeks, the share price of MPW has collapsed by more than 30% given some recent news surrounding the company. Last Friday, an event took place that caused the share price of Medical Properties to fall so hard so quickly that the New York Stock Exchange actually halted trading on their stock for a brief period. At one point, the share price had collapsed by more than 14% just last Friday before seeing a decent recovery. Finally, a bombshell announcement came on Monday, which was something that we were all fearing and was really the pinnacle of a terrible 2-week period. With all this news, I thought now would be a good time to cover this stock since I haven't gone too in-depth on this company since last March. Plus, this video will also be a part of my portfolio reveal series because as of the making of this video, roughly 1.6% of my dividend portfolio is made up of Medical Properties Trust. I currently own 222.906 shares of this stock. Despite this stock trading at more than $22 per share at the beginning of 2022 and is now trading for $6.93 per share, my average cost basis for this holding is $8.81 per share. Although it is small, I do have an interest in MPW's performance. It was just announced that Medical Properties would be reducing their dividend by 48% to better improve their financial situation. So let's take a deep look into the issues that Medical Properties Trust is facing and what the future might hold for both their share price performance and the issues surrounding their dividend. Since early 2022, there's been a couple issues that this company has been facing. The first has to do with a couple of their tenants, most notably Steward Health, and the second issue has to do with their stock coming under attack by people shorting it. When I covered this stock in depth last October, MPW had a short interest of about 12.53%. Today, MPW's short interest is now 21.07%. This has been a significant factor in the share price decline of this company's stock for more than a year now. Over the past few months, Medical Properties had been posting some positive updates regarding their business. In late March, the company announced that they had sold off some of their properties in Australia to HMC Capital for more than $800 million US. Just a few weeks later, it was also announced that Steward Health had agreed to sell some of their Utah properties for the purpose of improving their financial situation. On May 23rd, it was announced that another one of MPW's tenants, Prospect, had completed $375 million in new financing from third-party lenders. It was stated that the proceeds would be used to provide Prospect's hospital operations with liquidity and capitalize its managed care business. These developments had made the market more optimistic regarding MPW's stock. You can see that between March and early August, the share price of MPW had recovered by almost 40%. Despite many REITs falling during this same time, MPW appeared to be standing out as a company that was in the process of recovering. However, all of this changed on August 8th when the company released their second quarter results. Medical Properties reported revenues of $337 million in the second quarter of the year, which was a dramatic drop compared to the second quarter of the previous year. Although this was expected, the revenue drop was a little more than what the market had been anticipating for this company. What shook the market even more was their huge jump in expenses, specifically their real estate depreciation and amortization. This number had jumped significantly to $364 million for the quarter, which was a major increase compared to a year ago, which was $84 million. This was due to the events that took place with Steward Health selling their Utah properties back in May, and Medical Properties Trust had terminated their leases on these properties. Although we knew that this was coming, it was because of this that the stock had reported a loss in net income. For the second quarter, Medical Properties reported a net loss of income attributable to MPT common stockholders of 7 cents per share. These negative results caused a sell-off of their stock, and the share price of MPW fell by more than 14%. In the days ahead, several other press releases caused the stock to fall even harder, with large institutions either announcing that they were unloading their shares of MPW or releasing reports that they were slashing their outlook for this company. On August 11th, the large investment bank Raymond James announced that they were reducing their rating on MPW stock. Bank of America and the Royal Bank of Canada also released reports that they would now be bearish on the company's performance moving forward. Then finally, on Friday, August 18th, the Wall Street Journal published an expose on Medical Properties Trust regarding the refinancing on Prospect's properties that was announced back in May. The Wall Street Journal reported that a California regulator had put on hold the refinancing deal, which according to the article is necessary to save Prospect. The article caused the share price of MPW to fall so hard so quickly that the New York Stock Exchange actually stopped trading on their stock for a brief period on Friday. Several hours after that report, Medical Properties released a statement calling the article false and full of misleading information. The company clarified some of the accusations and said that the process of putting the refinancing deal on hold is a standard, expected, and non-controversial part of the approval process for the transaction. I think it should also be noted that the Wall Street Journal has been coming for the head of Medical Properties Trust for well over a year now, as they published several other negative reports on this company. Despite their rebuttal, MPW is still down by over 30% in just the last 2 weeks. Then finally on Monday, Medical Properties released a statement in regards to updating their capital allocation strategy. According to the press release, Medical Properties Trust today announced its board of directors have adopted an updated capital allocation strategy designed to significantly strengthen its balance sheet, lower its cost of capital, and position MPT for long-term shareholder value creation. This refreshed strategy prioritizes actions to expedite debt reduction while continuing to return substantial cash to shareholders. MPW's board and management team believe that this prudent capital allocation approach will result in sustainable improvements to long-term unsecured borrowing costs. The report would later go on to announce that in order to better align with the revised cash flow profile resulting in the recent property transactions and facilitate accelerated debt reduction, the company would be declaring a quarterly cash distribution of 15 cents per diluted share, which would be paid on October 12th to shareholders of record as of September 14th. This is a reduction of their dividend by roughly 48%. According to Medical Properties, in setting this new dividend level, the board has carefully considered the dilutive effects of recent and pending dispositions and recapitalization transactions while targeting an initial payout of projected near-term AFFO or adjusted funds from operation of less than 60%. This new target payout ratio is pretty conservative, and I think it's a good step in the right direction. Ultimately, the main reason why the dividend was cut had to do with reducing debt, which Medical Properties has been struggling with, and it'll continue to be an issue for them for the next couple of years. By reducing the dividend, this is going to save the company millions of dollars that they'll use to better position themselves for long-term performance. The article also said that they're going to work on reducing operational expenses to improve their financial standing, but they haven't really given many details as to what exactly they plan on reducing in their operational expenses. But these are all of the recent developments regarding Medical Properties Trust, which is quite a lot. And as we're all asking, what does the future hold for this company and its future dividends? You might also be wondering why I'm still a shareholder of this company and why I decided to buy even more shares of it despite my pessimistic outlook I released back in March of this year. For months it appeared that a dividend cut was much more likely. More and more analysts were writing negative outlooks for this stock, many of whom had made some good points in their analysis. But despite that though, I'm still optimistic about MPW's long-term future. Even though their tenants are struggling, I don't believe that any state or local government wants all of Steward Health's hospitals to be shut down. I haven't seen or heard anyone even suggest that Medical Properties is going to go away. Right now, this company's book value per share is at $13.89. Even with MPW unloading some properties, their stock is still significantly undervalued as of right now, and I had believed that the possibility of a dividend cut was already more than priced in. Before the announcement on Monday, MPW was offering a dividend yield of almost 17%. I figured that even if the dividend were to be reduced by half, which is pretty similar to what MPW actually did, then MPW would still be yielding over 8%. If the dividend were to be cut by 70%, then Medical Properties would still yield over 5%, which is still much greater than usual for an equity REIT. Like I mentioned earlier, I think one of the biggest drivers for the share price decline of MPW are the short sellers. As I've theorized in the past, I think that these people were just waiting for a dividend cut. I know I rarely talk about a stock's short interest because it's never been a serious issue for anything else I've looked at, but 21.07% is considered extremely high for a company. If anyone here's been following the drama surrounding the 3M company and their ongoing legal battle, their stock only has a short interest of 1.9%, so 21.07 is very high and I still think it's outrageous. But all of this is still developing news. It might seem like a dividend cut should result in the share price going down because a dividend cut is a sign of weakness. But if the market views the dividend cut as being a good move for the company to better its overall financial health, then there can be potentially a rally. But because I have a long time horizon when investing in MPW, my plan is to remain invested in this company. I do believe that we're now about to see a recovery in the stock share price, but at the same time, all REITs, including MPW, will probably continue to struggle until interest rates get cut. With that in mind, once MPW does recover, I might choose to sell my shares of this stock if I feel like the company isn't growing again. But I am willing to wait a few years for that to happen if necessary. But with that being said, that's going to wrap up our look today at Medical Properties Trust. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. You'll also have the option of reading this analysis as well as every other analysis that I do in this series. Plus it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.